Second week of January, and we are still green. Are you ready to summarize this week? Here we go. Hi everyone, and welcome back to the channel. I'm Micha Stocks from the channel Stock Talk with Micha Stocks, where we talk about the stock market. We summarize every week, and hopefully from this week, I'm going to add more and more videos during the week. So if you're new to the channel, it would be great if you can subscribe and of course, turn the bell or the notifications into all, and then you'll get notified every time there's a new video. And we're at a bit more than 1,000 subscribers already. So we're growing, and that's great. Let's start by summarizing the week. This is how the week summarized. Dow Jones, major averages, plus 1.4%. S&P 500, plus 1.7%. NASDAQ, the triple Qs, over 3% of gain. And Russell, the smaller cap stocks, up over 4%. When you look at year to date, and yes, I know it's only a week and a half. I know, but still, look at the Dow Jones, up 3.5% year to date. S&P 500, over 4%, 4.5%. NASDAQ, the triple six, 6.66%, and the Russell, 7.79%. A small piece of information that's interesting. The S&P has an annualized return over the years 1990 to 2022 of 10%. Yes, that doesn't include how 2022 ended, so it might be still 10% because it's a lot of years. Now, why am I mentioning it now? Let's go back. We are now at 4.57% year to date. I'm recording this January 14th, which means that in theory, and this is not financial advice, of course, in theory, we're very close to getting our annualized return in the month of January. I'm going to talk about it at the end of the video because I'm not sure that we're going to get to this point next week, but it's an interesting anecdote that you should keep in mind. Crypto market is on fire. Bitcoin went up 20% in last week. Ethereum up 16% year to date, 25 and 27%. Bitcoin and Ethereum, crazy, crazy, crazy. When you look at the heat map, most of the things look green. The areas that are red are more of the defensive side. This is the healthcare and the consumer non-durables, but others went up very, very strong in the last week. When we look at the different sectors, you can see that consumer discretionary was the best performer, up 5.7%. Then technology, real estate, and on the bottom we have healthcare and consumer supplies, which we talked about earlier on the heat map. And why all of that good stuff happened. Let's look at the major 17 stocks that were chosen by the viewers. So top performer is SoFi, ticker SOFI, went up 17%. And the bottom performer is the energy sector, up only 2.73%. You can see the different stocks. Maybe in a month or 2 months from now, I'll refresh this list and open up a new poll. Why did all of this happen? Well, apparently inflation is turning the corner. If you haven't noticed, prices are coming down. The easiest way to notice it is in the gas stations, of course, and we got it in the print. So Thursday, 8:30 a.m., the Bureau of Labor Statistics came out with the Consumer Price Index of December, and we see a negative print month over month and a 6.5% gain and an annual rate. What does that mean? Well, or why was the market so ecstatic from it? First of all, the market expected 6.5 and minus 0.1. So that wasn't a big surprise. It's great. It means inflation is going down. We still have a 6.5% inflation on a year-over-year basis, but it's going down. So prices are going down. We might get into deflationary area. But the other thing that was a surprise, and it really depends on which side of the surprise you are, is actually shelter. So we do see the real estate prices going down. We see home sales coming down. We see a lot of these in the high frequency data. We see all that information. But on the CPI, we still see an increase. So if there is leverage or an upside to next month, it's the area of shelter, which everyone would look at and see how it's coming down. At the end of the day, it's a good surprise. It means that when you summarize all the last 6 months and you try to annualize that, you're at a rate that, and we can do it together. This is 0.5 plus 0.4, it's 0.5, 0.9, 1%, and minus 0.1. It means that if we double that, because this is 6 months out of a year, it means that we're at 2% inflation. If we're at 2% inflation, it means that the Fed has basically achieved the goal that they wanted. And if they achieve the goal that they wanted, they can stop hiking rates. If they can stop hiking rates, it means that the market could stabilize. If it means that the market stabilized, we have seen the major averages do what they did. When you look at the chart itself, you can see how inflation is coming down. It's still very high, but if inflation is going to keep on going down the way it is, we're going to drop to around 4 or 3% in the next 3 to 6 months, which is great. It means, again, that the Fed has achieved the mission without keep hiking rates. But they haven't thrown in the towel yet. JP Morgan, and thanks Carl Quintanilla for sharing that, shows that part of the reduction in cost and part of the opening up of the supply chain or easing of the supply chain is shipping costs coming down. Ships are not waiting in the ports anymore, not like they were at the end of 2021. Basically, maybe inflation was transitory. Maybe all the jokes on Jerome Powell were too early. And this is what I talked about. Real estate, existing home sales are declining for the 10th month in a row. Yet, the CPI shows an increase, which means that this data hasn't yet factored in the CPI, and it has a lag effect. It will probably enter as well. But this is still going up. This is not the chart of Bitcoin. This is not the chart of a meme stock. This is the chart of the price of eggs. So maybe too many scrambled eggs, maybe too many sunny side ups, but apparently the price of eggs have skyrocketed and almost doubled itself. Why is that? Well, apparently there's a shortage of eggs due to some kind of issues that they had. And I think it was bird flu or something like that. Well, prices are currently up. But in these kinds of trades and in this kind of trades, usually, just like it goes up parabolic, it goes down like a rock. So be careful if you're trading eggs, which doesn't sound good. Let's continue. So the other thing that the Fed is looking at is wage, and wage growth isn't happening. People are just taking more jobs instead of getting an increase, which is good. Again, inflation is cooling down. Economy is cooling down. The Fed doesn't need to be super aggressive in hiking rates. That still impacts, the real estate. As you can see, David Sachs tweeted this earlier this week and said, I just got offered an office space in San Francisco at the same price of 2009. Again, going back to CPI still high, but we're not seeing that. That is that. Yet, Fed officials are still hawkish. They're still saying we are data dependent. We're going to look at the data, but the data says you need to stop. So both Bostic and Daly and others came out and said we are going to meet the 5%, maybe even more. But at the end of the day, the market right now is signaling to the Fed you are almost done, if not done. You cannot keep on hiking rates. Who's going to win? Remember, don't fight the Fed, so maybe the Fed. Let's continue. We talked about Daly. One thing that is still, or should still be top of mind, especially if you're an investor in 2023, is credit card. And the credit is going up for individuals, which means that there might be a credit crisis during 2023 because rates have gone up, because people are maximizing their credit card loans. This might be a very big problem. And where did they take the idea of increasing their debt? We're going to talk about it on something that might happen on Thursday at the end of this video. So stay tuned. Now, let's talk about the major news for this week. Disney asked their employees to return to office 4 days a week. So no more work from home, at least at Disney. Goldman Sachs cuts about 3,200 jobs this week after a cost review. Coinbase reduces 20% of their sales force, or workforce actually. Brian Armstrong sends a message to all his employees and actually puts it on the website so everyone in the world can see it, saying that he's sorry, but crypto winter was longer than expected. Wells Fargo is making huge changes in their home lending business and letting go of people. Google is trimming Verily, which is their healthcare unit, by 200 jobs. Bank of New York Mellon is supposed to lay off 3% of their workforce. Carvana is cutting workers. Credit Suisse is cutting 10% of their European investment bankers. A lot of layoffs. And you can see everything that was in the pipeline during December that was waiting for the beginning of the year, for Christmas to be behind us, happened in the first week and a half of January. Are we going to see this bar increasing? Probably yes, in the next week or two. January is going to be very, very problematic from a layoffs perspective. And it's exactly what the Fed wanted. Fed wants more layoffs. It wants the whole labor situation to cool off. And he's basically getting that. And when you compare only tech stocks in a site called layoffs.fyi, you can see that 84 tech companies had already laid off 23,000 employees in 2023. Yes, there's an Amazon, which increases those numbers, and others. But you can see here on the chart that the number of companies that laid off might be smaller than all of December. And I remind everyone I'm recording this January 14th, so it's not even half of January, but the number of employees is a lot more. And this is, of course, only tech related and not the whole sector like the previous chart. So layoffs. Let's continue. Palantir and Cloudflare, tickers PLTR and NET, announced a strategic partnership focused on the cloud, which is new to Palantir. Cloudflare is more on the security side of the cloud. JP Morgan Chase CEO Jamie Dimon is taking back his hurricane comment and says, look, I did see clouds in the horizon, but I'm not sure there's going to be a hurricane, maybe mild recession. So between a hurricane that frightened everyone to a mild recession, a huge difference. And after scaring and frightening the whole market and making the market fall to new lows, JP Morgan or Jamie Dimon does a U-turn and relaxes everyone. Disney is adding more free photos and lowering the prices of tickets to their Disney Magic Kingdom and other spaces. But Nelson Peltz, an activist and an active investor, has enough shares to start a proxy fight inside Disney, asking them to resume their dividend, to focus their business, to increase their margins. Basically, he's telling the board of Disney, you are not doing your job to the shareholders. They expect more, and the company is not delivering. He doesn't have anything against Bob Iger, which just came back, but he's starting a proxy fight because he wants the board to be, at least some of them, to be removed or replaced with people that are more, let's call it, business-oriented or are more focused on shareholder value. The FAA, during Wednesday, stopped commercial flights, or actually any flight coming out of the US, for at least 3 hours because of computer issues. Now, they, of course, denied that it was some kind of cybercrime, but you do start hearing stories, not about cyber, but the computers that they're running are very, very old, not only hardware, but also software. I don't know yet which companies are going to upgrade the FAA systems, but an upgrade is probably in the cards. Let's continue. Robinhood opening up the IRA opportunity to anyone using their platform and actually providing 1% match. Basically, Robinhood is taking the place of employers, saying, bring us your IRA account and we'll match 1% on every deposit. Very interesting approach to get more money and more clients into the platform. Amir Karangi talked to two CEOs of a multi-billion-dollar companies, and neither of them have heard of ChatGPT. So if you're seeing this video and you have no idea what is ChatGPT, this is your opportunity to start learning about that, not through this video, but through other videos on the web. ChatGPT might be one of the most disruptive technologies out there. Everyone is talking about it, but the company that is putting money behind what they're saying is Microsoft, which eyes a $10 billion investment in ChatGPT in a very complex transaction, which means that the $10 billion will be paid off by 75% of the revenue coming into ChatGPT and other avenues. But Microsoft is gunning over the search, and there are rumors behind the scenes that Microsoft wants to integrate ChatGPT into Bing, their failed search engine, not failed, but the search engine no one uses. And also Google has a code red in order to find a solution to compete with ChatGPT. Apple with two very, very interesting pieces of information. One is they are reportedly going to use in-house wireless chips in their phone by 2025, which means that Broadcom and Qualcomm are going to get hit very strong from that. And the second thing is regarding screens. They're going to start producing their own screens, which is going to hurt Samsung and LG. At the end of the day, the screens, in my opinion, is a lot more impactful to revenue for Apple, because at least from the way I'm seeing that, Apple will need to combine between the iPad and the Mac into one stream of products, because people and young generations right now are used to the swipe, and they come to the computer, they come to the MacBooks, and they're trying to swipe on the screen and nothing happens. That is part of the reason I believe that Apple is doing all this combination. But again, I don't work at Apple. I have no idea if my thought process is correct. Stay tuned. It's going to be very, very interesting. And on the Apple front, Tim Cook agrees, requests, you choose which terminology you want to use, for a pay cut in 2023. His pay cut is reduced by 50%, but don't worry for him. He's still going to get about $45 million of a paycheck, and he took the reduction and just transferred the money into stock options. Now, when Apple's stock price is down by 25%, it seems like a very smart decision to do, to get more stock at a lower price than less stock at a higher price. We'll see. But what it does mean is that Tim Cook is not going anywhere. So if you were gunning for his job, think again. Boeing is delivering orders, and their orders jumped in 2022. They're very close to beating their top delivery orders. And Realty Income, a company ticker O, this month declared their 631 consecutive monthly dividends. Now, the company has actually changed their logo into being Realty Income, the monthly dividend company. They have pride in providing a monthly dividend paycheck. So if you're looking for a monthly dividend, it seems like Realty might be the right choice for you. And again, this is not financial advice. Let's talk about Tesla. So Tesla Model Y became the US 6th best-selling car in 2022. But when demand is coming down, Tesla is working full force and is cutting prices in the US, in Europe, in China, everywhere, between 5 to 20% reduction in price. Model S went down from 105 to 95. Model X, these are the more expensive models, but the big drama is in these models. The Model 3, the Model Y, most if not all of them are now eligible to the IRA, the Inflation Reduction Act. They're eligible to get rebates, which can be around $7,500 of tax benefits, and others. Tesla with a very aggressive approach, which might be because they did it in China and they got a lot more orders. We don't know. We will see it, of course, in the next few days, the next few months. But a very, very aggressive move from Tesla. And they explained that on their German website, saying that at the end of a turbulent year, and because of the interruption of supply chain that basically ended and the reduction of cost, they decided to relieve their customers. Well, it sounds more of a marketing spiel, but never mind. Walmart strikes a deal with Salesforce, WMT, and CRM, which Walmart will sell Salesforce tech to its retailers. So Salesforce is trying to build themselves as the Amazon, and maybe CRM being the back office of that. We shall see. And JP Morgan with a very bizarre story, acquiring a website a few years ago at $175 million. And the founder of that website, which was supposed to provide college financial aid, basically made up accounts. They weren't worth even not half of what was paid. And JP Morgan needs to basically write off that investment and shedding millions from the bottom line. We talked about Tesla. This comes from China. Tesla received 30,000 new car orders in China only 3 days after they cut their price. Will we see the same numbers, if not more, in the US in the week to come? We will be here to update. And this is also very bizarre. Friday morning, pre-market, all these companies that you see here, all these banks, Bank of America, Bank of New York, BlackRock, Citi, Delta, JP Morgan, United Health, and Wells Fargo. So except Delta and United Health, all the others are banks. All of them reported. As you can see on the right-hand side, pre-market, this is how their stock performed. Most of the stocks were at the negative side. After reporting, you can see if they beat or miss. But, and that is the bizarre thing, trading on Friday started red, turned very quickly into green. And when you look at the banks, Bank of America ended at a plus 2.3, Wells plus 3.2, JP Morgan 2.5, and BlackRock came in unch. Why is this bizarre? Because basically it means that if you didn't have the ability to trade in pre-market and you didn't even look at your charts, you would look at this and say, oh, it was a good day for the banks. If you did, if you're in pre-market and you're looking at everything, you would say, oh my God, I gotta stay out of the banks because they're red. So has the market, or is the market going crazy? The answer is probably yes. Why am I saying that? Because Bed Bath & Beyond lays off employees because they're struggling to survive, yet their stock is going parabolic. In the last 5 days, actually up until Friday, Bed Bath & Beyond stock went up 238% from Monday. GameStop went up 24%. AMC went up 29%. Has the market gone crazy? Well, when meme stocks are back in fashion, the answer is probably yes. So these are all the important and interesting headlines for this week. Let's talk about next week. Next week, most of the major averages, the Dow Jones and the Russell, are coming into the week when they're overbought. Overbought meaning that they're furthest away from the 50-day moving average, and they need to come back. Come back mean that there might be a correction in the cards. The other major averages, the Nasdaq and the S&P, are not yet at an overbought situation, yet the timing of buying them is poor. Davos is supposed to start at Tuesday, one of the biggest World Economic Forum in Davos, Switzerland, and we will probably get a lot of pieces of information from CEOs there and policymakers talking about the problems in the economy and the recession and all of that. But if you're afraid, remember one thing, that the Davos elite, they like to make bold predictions, but they don't always get it right. Remember that. What else is going to happen? So you remember the credit problem that consumers have? Well, apparently the government has the same credit problem. Janet Yellen, as of Friday, tells the Congress that there needs to be steps being taken in order to avoid a default of the U.S. Now, will the U.S. default or not? Usually there's resolution for that, but we'll see Thursday. And we're gearing up for the second week of earnings. We're starting with, of course, the whole week is going to be spread with a lot of banks, as you can see, banks and other investment firms like Morgan Stanley and Goldman Sachs. We're going to hear from other banks as well, but not less important is United, which is going to be compared to Delta Interactive Brokers, which are going to talk about the retail investors, Alcoa on the side of aluminum, Netflix, we're going to hear more about their ad-supported tier. Are customers taking that? And of course, Schlumberger from the energy sector and others. A very, very, very interesting week. And when we look at the charts, as we always end, we are now in the S&P 500, still in a downward trend. We did conquer the 200-day moving average by a fraction, less than $1, which means that nothing has really changed. But if you want let's start with a downside. So the downside is that we can keep going down. We're still at the downward trend. Nothing has changed from that perspective. We do have major support around 375 on the SPY, and the lower support might bring us to 348. But if you want to sugarcoat things, and if you are a dreamer at heart, let me change this view into a weekly view. And you can see, let me hide all the drawings. And if you're a technician, or even if you're not a technician in charts, let me hide the moving average as well. You might be able to notice that there is a term, or actually kind of a way to describe charts by a head and shoulders. A head and shoulders is usually a bearish phenomena. When it happens on a stock that goes up, like it happened here on the S&P, you can see this is a shoulder, this is a head, and this is a shoulder. Usually it means that the price of that equity is going down. Now, why did I show you this? Because if you invert it, it means that you might go up. Now, of course, this is not financial advice. This is not even me trying to persuade you into something. It's something that is being talked about. Why is it being talked about? Because on the weekly, you can see that we might be having, this is a right shoulder, a head, and a left shoulder. Now, if this is the case, and we are not going to drop underneath 374 and we will go up, it means that we have basically ended the bear market. Is that the case? Isn't that the case? Are we just a hair from dropping down again and having the last flush that everyone is waiting for? Or have we capitulated enough and from here we're going to go to the moon? One thing I can tell you for sure, I'm going to be here to update you. So, if you enjoyed everything you saw, it would be great if you can smash that like button. Of course, share the link, because the weekly recap like this with a pace and all the headlines, it's something unique. Till next week. Or maybe there will be a very interesting video during the week, so make sure notifications are on. I'll see you next week. Bye-bye.